Good morning, everybody. Hey, welcome to Wednesday, April 15th. Normally, we would be talking about tax filing deadline day, but hey, that's got extended until July 15th. So, take a breather. You got a little time to get those taxes in. But let me remind you, yesterday was an up day. Looks like today could be a down day. We are in this roller coaster ride again. Now's the time, though, based on what we're seeing and what others are saying, I think people need to be looking at their portfolio to make sure that their risk is where it needs to be. That's why we designed our financial x-ray review, to really dig down to see how much risk you have in your current portfolio. Hey, give me a call right now at 863-382-0037. That's 863-382-0037. Hey, to schedule your financial x-ray.
Oh, Light AFM morning all. I'm Dave. We're at 8:40 here. It's 20 before 9. Time to check in on the money front and see what's going on Wall Street this morning. Decent day yesterday. We'll call this in the show business terms a tease. Not quite so pretty this morning. Let's go downtown and find out why. Phillip Statler from Statler Financial Services is on the line from his usual undisclosed location. Phillip, how you doing this morning?
I'm doing well today, Dave. I did a little rearranging yesterday. After the first week of basically working from home, I really think that when you're trying to work from home, you need to have the exact replication of your office as best you can. And, for the last 4 years, I've used a stand-up desk. And I was having difficulty because I was having to sit at my computer. So yesterday I went out and got me a stand-up desk for my home office. And so now I'm standing. I feel much better, and I think this will be a much better week.
I've always been jealous of that stand-up desk whenever I've seen it. I want one for my home office because every studio I've ever worked in for, Lordy, 35 years has always been stand-up, and I wouldn't work any other way as far as performance work is concerned, so I understand where you're at. Congratulations, and thank you for keeping the local economy stimulated.
Yeah, exactly.
Well, start out the morning with what probably isn't a big surprise during a shutdown, but whoa, Lordy, we set a new record for the Empire State Business Index, didn't we?
We did, and it's not a good record either, Dave. The Empire State Manufacturing Index was a minus 78.2, which was a historic low. It's never been that low before, which tells you that that section of the Northeast is really and truly shut down when it comes to manufacturing.
Oh, Lordy, if the pictures of Times Square in the New York streets don't tell you, the index does. I think if I remember correctly, anything under positive 50 indicates shrinkage. So you go negative 78, you're getting just about as bad as you can get if it weren't for the fact that we can at least put our finger on the cause, right?
Exactly. At least we do know what's causing it, and we do know that once this thing gets back going again, and we get this virus under control, then we know that that'll pop back up, and manufacturing's number 2, I think, on Trump's list to get reignited.
Yeah, that's true. And Cuomo was talking about up in New York being able to free things up a little bit faster because, well, New York had it hit them harder and faster than the rest of the country. So they may actually be able to open up earlier than the rest of us, given how bad that index is. That's probably good news. You also found another macro report ahead of me today about retail sales.
I did, and it wasn't good either, Dave. A matter of fact, it has had a major impact on the futures this morning. They missed. They expected, here's what the expectation was. They expected retail sales to be down 7.7% negative. It was down 8.7%. I couldn't find the retail, not including automotive, because that's another number that gets tracked. But that's a whole percentage point worse than expected. And once that number hit, the futures started tanking even more.
I see a distinct knee on my futures graph right about the time the federal government dumped that data. I guess I'm more than anything surprised about how small the drop in retail sales was. Do we know what is that full calendar month, January or 1st through 31st, or is that another weird one like the unemployment is?
I think it's the whole month of March
Okay.
because they were talking about how sales really and truly, well, JB Hunt said it. The last part of the month, they saw a drastic decrease. Up until then, they were doing okay.
That was kind of what I was thinking. I mean, if it was like the unemployment numbers that run mid-month to mid-month, we weren't even getting a sample. That would, at the very least, includes the entirety of the mess during March. So we've got at least a reading. I guess then I'm surprised that it was as modest a decline as it actually was.
Yeah, I mean, hey, it's negative. It's a pretty big decrease, and it wasn't a full month, right? It really kind of started, at least for most of the country, about halfway through the month. So April will probably be a much better number, an indicator of what this thing's doing. Hey, the other thing is, after you and I got off the air yesterday, the export prices index came in,
Yeah.
and those prices didn't drop as much as expected either. They dropped 1.6%, and they were expected to drop like 1.9. So again, both of those, both the import and export prices, didn't drop as much as expected.
Now, on the export side, I guess we can consider that good news that we're maintaining a little bit better pricing than we expected in order to continue doing what business we can.
Well, yeah, I think so. And plus, it goes back to supply and demand, right? That's all going to be based on supply and demand.
Yeah, and the word of the day is what demand, right?
Exactly.
Talking about demand, talking about the stocks that are reporting, the financials are the usual early flurry, and I'm looking at 46% earnings drop from both Citigroup and Goldman Sachs. And what's really scary about it is Goldman Sachs was expected to have a 46% drop in earnings on their report.
Yeah, they were. They were expected. I mean, everybody expects the banks to be down. Goldman Sachs, though, I will tell you, is their quarterly earnings, they did miss by 20, 25 cents, somewhere in that ballpark. They missed on earnings per share. Revenue, though, exceeded the projections that they had. Again, they've increased their reserves for losses because of what's happening in the marketplace right now. So their stock is trading down 3.5% this morning.
And on Citigroup, I would imagine they also have some big reserves, too. I was flippantly saying before we went on the air, Citigroup will give a credit card to a turnip. So I got to assume they're probably reserving quite a bit as well, aren't they?
They are. They've increased it to a total of $4.9 billion. Now, Citi, I can't really give you the earnings per. I mean, give you the earnings per share. I can't really give you what was expected because truly it was all over the place, Dave. I've never seen an analyst expectation to be so scurried as what I've seen with Citibank. So it's not even worth mentioning. But I will say that their sales, again, net income was down 46% too. Their revenue was up 12% from a year ago.
Really?
Their earnings, and their earnings per share was about off by about 80 cents compared to what it was a year ago. And their stock is, again, getting beat up pretty much like everybody else, down almost 4.5%.
Not fun. Well, is there a bright spot on Bank of America?
Dave, I wish I could say there was, but there's not. They missed by 6 cents, which may be about the best bank numbers we've seen in terms of miss. Revenue was in line with expectations. Again, they're looking at adding loan reserves to a total of $3.7 billion. So they're seeing a big deal there. Liquidity position seems to be very strong right now. But if you look at Bank of America, they're trading down about the same range. They're about 4.25% right now.
I suspect the entire sector is getting beat up with 2x4s based upon the first 6 banks that we've heard about over the first 2 days. You do have some other industries that are letting out some information from last quarter as well. Do you have anything good?
I do. I have United Healthcare, the health insurance group. They beat by 9 cents a share. Revenue was above the estimates. Of course, they're having strength across all their business lines right now. And they, unlike most of the people that we get reports from, they are maintaining their full-year outlook. And even though they're not sure exactly what the impact's going to be based on COVID-19. And so they are trading up about 1.4% this morning.
Cool. Kind of surprised that they kept their guidance going, given the banding about in Congress about requirement for a 100% payment of testing and all of that stuff. I thought the healthcare industry might be in a little state of upset.
Yeah, you would think, but I guess based on analyst expectations, and they think they can still hold the line or get some subsidies from the government to help cover those costs.
That's true. And given the amount of money they throw around, testing for a virus probably is small potatoes in their big world.
Yeah. So I got two more for you. I've got J.B. Hunt on the earnings front. They missed by a penny. For those that don't know, they're the big trucking company. They carry our goods across the country for us. They missed by a penny a share. Revenue top forecast. They did say that they had some disruptions really started to appear in March and escalated really through the end of the quarter. So that really was hurting them. But they're trading up this morning about 3%.
All right. The other indication you got?
So the other one I have is Procter & Gamble. Let's see if I can find it again. I lost it. Well, I can't find that one again. But let me tell you about JCPenney's.
Yeah.
So JCPenney's is investigating and looking for possibly going bankrupt.
You and I have been kind of saying they've been at risk of that for quite a while, and shutting down all their stores, I kind of had a bad feeling during the shutdown crisis that a couple of big names weren't going to make it.
They do have Procter & Gamble. They did find it. They haven't reported. They've actually pushed their reporting date till Friday, but they did announce a 6% increase in their quarterly dividend.
Cool. Well, that indicates at least a harbinger of some good news.
Yeah,
one of those up-C, down-C periods going again here. Yesterday was an up-C. The Dow was up by 559 points yesterday. NASDAQ was up by 323, and the Standard & Poor's was up by 84, all of those in the 2 and 3 and almost 4% range in the case of NASDAQ. I got to assume what goes up got to go down, especially when I look at the business index and the export prices.
Yeah, we are. Right now we're seeing the Dow giving back basically everything it made yesterday. It's down 2.5%, almost $600. The S&P 500 is down 2.9%, which is about $82. And the NASDAQ's down 2%, $172. So everything is definitely coming up red today as we get started this morning. We do have red, Dave, across the board today. Silver is down 3%, giving back what it made yesterday, and gold's down 1.4%. And I don't know if this is a big shocker or not, but crude oil below 20, $19.73 a barrel. That's down 1.9% from yesterday.
That's amazing. And it's all red on overseas markets as well. The Asian Rim markets closed down, not by a monster amount, but down over the overnight hours. European markets are trading down close to 3% across the board midway through their day. Phillip, we are talking about volatile times. When you talk about 600 down after 500 up, that's kind of the poster child for volatility. How do I get a hold of you to try to stabilize my market position?
Dave, right now, given that we did have a little bit of a bounce back, it's a great time to get a second opinion and to go through our financial x-ray to determine how much risk you have in your portfolio. Give us a call at 863-382-0037 to schedule that phone call or a virtual meeting, or we can meet you at the office. We are an essential service, so we can be there if you need us to. So that's one way. Follow us on Facebook at Statler Financial Services, and then join us this weekend for the Statler Financial Radio Show, 6 a.m. at noon on Saturday, 10 a.m. on Sunday mornings. News Talk, 7:30 a.m.
I was going to say, it's on News Talk 7:30. We'll be back again here tomorrow morning here on Light. Phillip, thank you much. You have a good and a safe day, all right?
All right, buddy. You too. I look forward to tomorrow.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, please take me up on my offer. Free, absolutely no obligation on your part to determine how much risk you have in your current portfolio. Call us for your financial x-ray review of your current portfolio. It's important. 863-382-0037. Let's get something put together. Let's get on the phone and talk together. Have a great day, and I look forward to speaking to you again tomorrow.